Good afternoon, everybody, and welcome to another session, another webinar by Cooperation Africa. Please note that this session is now being recorded. Cooperation Africa encourages and supports cooperative development across the continent. And this webinar is part of our education and training program designed to raise awareness about cooperatives in Africa. My name is Adote, and I shall be moderating the session today. Please introduce yourselves on the chat, and remember to place your questions there or in the question and answer section that is provided. Whatever you put there will help to shape the discussion after our speaker, Alhaji Muhammad Kanu, has made his presentation. The session will last for about an hour and at the most an hour and a quarter, and our speaker will speak for about 35 minutes so that we have about 15 minutes for questions and his responses. I shall inform him about 5 minutes before the 35 minutes is up. We have interpretation into French, so please use the interpretation link to access French if you would prefer. But before we hear our speaker, for the benefit of those who do not know much about Cooperation Africa, let me say a few words about what we are, what we do, who we are and what we do. So we are a membership organization registered in and operating out of Ghana with members from across the African continent. We support cooperatives because as businesses owned and democratically managed by their members, cooperatives help those members to achieve higher and more secure standards of living. Members of what we call procurement cooperative, producer procurement cooperatives, who are very often farmers, are people who buy their inputs together and therefore benefit from the lower prices because they are buying in bulk. Members of what we call producer marketing cooperatives allow their members to sell their output together. They sell their output to the cooperative and the cooperative then sells it on, and therefore also are able to benefit from a higher price. Members of credit unions, which is the subject of our discussion today, are what we would call consumer financial cooperatives. And very often in East and Central Africa, they are known, and Southern Africa, they are known as SACCOs. And they allow members to borrow, to save, and then to borrow, and thereby get access to finance. Members of what we call consumer retail cooperatives can organize themselves to buy quality food and other groceries in bulk, and also then benefit because of lower prices. Then we have members of consumer housing cooperatives that can access collective housing or housing more cheaply. And perhaps finally, we have what we call members of worker cooperatives who can own and democratically manage their businesses together. So a worker cooperative is a jointly owned and democratically managed business, and the workers then share the profits that the business generates and secure and achieve a more secure set of livelihoods. We are of the view that if African countries have more and stronger cooperatives, they'll be better able to provide more secure employment and better standards of living to their members. African countries with many strong cooperatives will be less dependent on other economies because cooperatives can become large relatively quickly, will engage in producing technologically advanced goods intended first for local consumption and will then be able to export. They'll be able to distribute the benefits of growth to many members of the society so that not just a few benefit from the growth. In short, cooperatives will make for a more dynamic, equitable, and independent society. So we strive to promote cooperatives firstly through country research into cooperatives, followed by advocacy. That's the main thing. So we do research in country and then we try and do advocacy around it. Secondly, we do education and training events like these. And finally, we actually are in the process of setting up a system that will allow us to finance cooperatives. So as part of our current activities, we publish, in addition to these webinars, we publish a monthly digest of news about cooperatives in Africa. And please subscribe to this on the website, and then you'll receive it every month. With regard to the research and advocacy, last year we commissioned 4 research reports into the enabling, what we call the enabling and inhibiting factors affecting cooperative formation in Ghana. Ghana was our focus. And we should be launching the results of that research this year, later this year, and trying to do advocacy around them. Then in this year, we're going to commission 4 similar bits of research into the situation of cooperatives in Zambia. And we would then be able to doing advocacy around that when the reports are in. So we are a membership organization, and we welcome members, either as individuals or organizations, of people who are willing to actively help to bring about a more cooperative and self-reliant Africa. So please see our membership section on the website, and join us in trying to build the kind of Africa we want. I now want to introduce this week's speaker, Alhaji Muhammad Kanu, who is the finance officer of the National Cooperative Credit Union Association, NaCCUA, in Sierra Leone. He has an MBA in finance and has 7 years experience working in the credit union sector. The National Cooperative Union Association of Sierra Leone is the apex body. It's the national top body of cooperative credit unions in Sierra Leone, and plays an important role in promoting financial inclusion, strengthening credit unions, and supporting sustainable economic growth through the cooperative principles. So let me please now invite Alhaji Muhammad Kanu to make us his presentation, telling us the things that his organization does in Sierra Leone. Alhaji Muhammad Kanu, please, over to you.
Thank you very much for the welcome. I really appreciate the background of your organization, what you are doing. So I will now start to share my screen to go straight to the presentation. Yeah, the topic of the presentation will be enhancing credit union growth, Sierra Leone. We know from NaCCUA being a secondary cooperative, that it is being formed after the primary cooperative that have been formed. So in order to collaborate with the activities of the primary credit union, NaCCUA as an apex has to be formed. The presentation will cover these areas. We'll be talking about the background of NaCCUA, the NaCCUA membership, the governance structure of NaCCUA as just like for other organizations, the statistics of the credit union movement in Sierra Leone, our products and services that we are offering to our credit union members. Then we will look at the future goals and strategies, then look at the lessons learned from challenges and success. NaCCUA is the apex body of all credit unions in Sierra Leone, though we are still operating with the old act, which does not specify that for any country you only have apex body, but for now it is the only apex body. It was established, formed in 2012, but later registered as a cooperative, a secondary cooperative in 2023. It started in terms of staff was me as an administrative secretary. So in July 2023, based on some engagements, we have the general manager, we have a compliance officer, and the administrative secretary position was transformed to the finance officer. But the current strength of staffing for now for the Apex organization is 5. We are supported by a donor, which is ILCOF, which also have about 14 staff to ensure the smooth running of the Apex. Our main responsibility is to provide supervision, ensuring that these CUs are in compliance with their bylaws, they are in compliance with the Act, they are in compliance with other required legislation like the income tax, the NaCCUA requirements, even the Anti-Money Act. We also ensure that we provide training in order to do capacity building for these, our members, training that ranges from governance, training that talks about risk management, trainings that talk about bookkeeping, and even some point to ensure that they understand their audit report. We also provide advocacy, as this is the main role of an Apex body. We try to collaborate with government to have a perfect legislation for credit union. We collaborate with other partners to see how we can support this credit union. Then on this, we also provide MIS. When NaCCUA with credit unions started operating, most of the credit unions we are operating on manual records. And we all know the challenges that manual records faces when you talk about errors, human errors. So now we also help them to provide MIS facility for them. NaCCUA current standing, as yes, it is being established way back in 2013, but we are still young. 65% of our operation is donor funded. Our mission is to promote financial inclusion. We know in our country in particular, the underbanked are the majority. And most of these underbanked are in rural areas. So for us to ensure that we capture this market, we need to ensure that we promote financial inclusion through these products by providing good products and services to this credit union. Our vision, which is the long-term goal, is to ensure that we become a strong and valuable national association to support these credit unions. Our values, just like other reputable institutions, we talk about integrity, professionalism, confidentiality, and the community responsibility by ensuring that since our credit unions are operating in a particular community or area, the credit union must also have that part to provide back to the members in terms of social responsibility. Another part that I will be talking about, the governance structure of NaCCUA. For an organization to run smoothly, it must have a clear line of authority or in terms of whom to report to, whom you are going to be accountable. Under the credit union, the Apex, our members are the credit union. From the organogram, they are the topmost. They have to make decisions for the operating of the NaCCUA. The general members at an annual general meeting elect through election, elect board of directors. When you look at the bylaws of NaCCUA, it is clearly stated the election of board members has to be done by the members. The members will also elect the supervisory committee, which serve as internal checks for the Apex. They serve as internal auditors. Then the board will appoint a committee. Presently, as one of our products, the CFF, the board will now have the authority, they have the responsibility to appoint the CFF committee. One of the key roles of the board members are voluntary. They are not there to do the day-to-day operation of the movement. In turn, they will hire the general manager, who is the head of operation, that will in turn hire other officers. So from the organogram, we have the general manager, we have the finance officer, who is myself, We have a compliance officer. We have administrative officer. Then we have a driver. Currently, from our database, we have 25 credit unions in 12 districts. We have 14 districts in Sierra Leone, but for now, we have 25 credit unions in these 12 districts. Our membership is still small, which is just above 18,643. Our total savings is 1,347 when you convert it to US dollar. Our total shares being the amount that you pay for you to be a member of the credit union is still small. We have about 130,435 US dollar. The total loans as compared to the savings, they are still moving in the same direction, which is the 18,643. Then our total assets is just equivalent to 2,000 for now. The NaCCUA statistics, as I have just explained, presented, can be illustrated using this chart, which I have already explained. There, if we move to the products and services, what makes us as NaCCUA? What makes NaCCUA as an institution that will enable the function of other credit unions? We talk about the advocacy and representation. NaCCUA as an institution serves as intermediary between government, other key stakeholders to ensure that we promote the philosophy of credit union. We promote the concept of credit union. We try to engage government institutions to ensure that they understand what we are promoting. We ensure that the government understands that we are also part of the development and also ensuring the financial inclusion to be properly implemented. Another key product and service that we offer is training and education. Of course, when the movement started in Sierra Leone, the ideology, the philosophy of credit union was a new one. So we have to take them through to know the responsibility of board members, responsibility of committees, responsibilities of members, and other organs of the credit union. So this is another service that we are offering to the credit union. Another part is financial literacy, which we all understand that this does not mean that when you are educated, it means that you understand the concept of financial literacy. We have proved it that most of the workers are just using banks for just collection of salary. But the impact on how you are going to manage your budget, how you are going to manage your finances, that area is lacking. So as NaCCUA, we provide this these services, even to the rural areas where other members cannot even read and write, but through support from donor partners by the introduction of My Oral Village, which help us to show train members on how they can identify and be able to read their accounts. Monetary and business support, we know for any institution, you have to endure to monitor this credit union. So we are also doing that at regular basis to monitor this credit union, both on-site and off-site. So sometimes during off-site, we'll just call for reports. This report will be sent to us, we review and see a follow-up on it. Marketing and public relations is a way of ensuring that we bring the movement, the total movement, not only one credit union, but the total movement to be recognized for them to market their products and services so that we'll have an increase in membership, increase in savings, and also we will have a friendly environment. The issue of management information as another product for NaCCUA is that, as I have said earlier, when we started, most of the records were in manual. One of the biggest credit union in Sierra Leone now, Taopane, used to have membership of 1,000. And that was challenging to record from receipt book. You move to JCR, you move to other document, that was challenging. So NaCCUA has also ensured that we provide these services to them. One of the key products for NaCCUA for sustainability, for the development of the movement is the Central Finance Facility. The Central Finance Facility is a pool of funds from the CU where they can invest to the Apex. In turn, the Apex will invest this money and give them back interest. So under the Central Finance Facility, we started with the 5% savings on CU savings. We look at your statement, 5% of that amount from the CU savings will be paid to NaCCUA. We started it in 2020. In 2024, we also add another component on the CFF. Now we call it the CU Statutory Reserve. We have seen from our lessons learned here that most of the loans that they are given, when we say this amount should be reserved, it is not used as reserve, but most of these figures, we are also part of the loan. So to ensure that we have a sound movement, we need to ensure that these monies from the statutory reserves through the Central Finance Facility are being sent back to NaCCUA as a way of protection and also to manage liquidity. Our future goals and strategy. For a movement for credit union, we all know if you want to be sustainable in the movement in this business, your membership, you must have a great number of membership. So our focus now is to ensure that our membership moves from 18,000 to 100,000. So people will want to understand within a period of 3 years, because that is the target. Within a period of 3 years, how will you move from 18,000 to 100,000? We have looked at various areas. First, we identify the existing credit union growth rates, say 20%. That will give us a figure. We are going to focus this time around to establish work-based credit unions, at least 5 work-based credit unions within the period of 3 years. That's another strategy that we'll be looking at. We are also going to look at pathways in promoting savings. We have these village savings. We have NGOs that are promoting savings through other ways. So we are also going to partner with them to ensure that we transform them from just their village savings to credit union. Another area is Sierra Leone as a project is also establishing credit unions. So we are also going to partner with them to ensure that we tap on it and increase the membership of this credit union. Another point is develop new products and services. Just like what we are doing to make a friendly environment for the growth of the credit unions, we also need to ensure that we bring products and services that will be appreciated by members so that they can also value the NaCCUA. We are planning to introduce the loan protection scheme, just like other apexes, particularly in the Gambia. The loan protection scheme operates as a kind of insurance. When a member took loan from primary credit union, a small amount will be charged, and this amount will be paid in a kind of premium to the apex. In case that the loan become delinquent as a result of factors that will be considered in the loan protection policy, the apex will come to the aid of the credit union. Financial sustainability as under growth and consideration is to ensure that we look at these credit unions and advise on how they can grow their total assets, how they can grow their profitability and other key areas. As NaCCUA, we are partnering with other organizations, especially for projects. We are also partnering with the government and other regulatory institutions. Now, we will continue to collaborate with other key stakeholders. Currently, we are collaborating with ILCOF. We have DSIK, the German Sparker Stiftung. We are going to collaborate with CEN to ensure that we build this partnership. We'll also ensure that we advocate for a supportive regulatory framework. Currently, we have an MOU that has been developed between the Department of Cooperative Bank of Sierra Leone, which is the Central Bank of Sierra Leone, and NaCCUA in terms of monitoring, in terms of auditing. So we want to see as a strategy, the more engagement we do with institutions, that there will build our partnership. On the area of capacity development, this is a key pillar in our strategic plan, and for the movement to grow and be sustainable, we need to pay more attention to this pillar by developing the capacity of the CUs and even NaCCUA staff. Because if you don't understand what you are going to implement, it will be difficult for you to implement properly. As I have said earlier, on this capacity building, there has been an ongoing training on governance, explaining the roles of the board, explaining the roles of committee, explaining the roles of management. We have also introduced another system of mobilization of savings. That is, we have the savings game. We also look at a capacity building for entrepreneurship by the introduction of the micro business game. So these are key areas that we are looking at for capacity building. Even for MIS, currently we are using, for two of our credit unions are using the NaCCUA Soft. NaCCUA Soft is a software that is being used in Gambia, just like other countries. So we have engaged them and we started operating with 2 credit unions with a plan to add more credit unions. 70% of them are currently using an Excel system we call EasyBooks. So we also need to develop the capacity of the users. NaCCUA will facilitate a peer learning for within the country and outside the country. Yes, it is being established in 2013, but as I have said, we are still young. We need to learn from other apexes like CUA in Ghana, NaCCUA in Gambia, even Alcuna in Liberia. On the safe and sound credit unions, this is also key, the migration from manual to core banking system. Yes, we have CUs that are still using the manual, mostly the small credit unions. The majority are using the EasyBook. Then 2 are using the NaCCUA software. That is when it comes to the safe and sound of the credit union. We'll also have the issue of management of portfolio at risk. Of course, this has been a great challenge for us before, because even for you to calculate, to recognize it, to be able to understand the portfolio at risk was a difficult one. But with the current interventions of capacity building, our CUs now understand now the area that we are in, how they should use their understanding to ensure that they properly manage the portfolio at risk. Lessons learned from challenges. The issue of the epidemic in Sierra Leone, which affected the economic participation of members, that is both the Ebola and COVID-19. We'll also look at the sustainability of the movements, looking at the statistics. For us, we might say we are growing, but those figures does not represent that it will be sustainable. So that is, we know that we have this number, but we need to do more. So among the challenge, this is one of the challenge. With legislation, as I have mentioned earlier, the Cooperative Act of 1970, we are still complying with the Cooperative Act of 1977, wherein if someone is defaulted, commits, go against the bylaws or the act, the punishment is too minimal. So we are trying to see how best we can engage our partners, we can engage the government to ensure that it is being reviewed. Information system is also a great challenge, as I have mentioned. That is why just from the manual recording to now we are talking about EasyBook and the NaCCUA soft. So it was a challenge, it's still a challenge because the EasyBook is not just, it is just an Excel base, but we have also learned a lesson from that because when we transform from manual to EasyBook, we see most of the errors that we are committed and how we can minimize them. Donor dependency. For the CUs, the primary CUs, most of them are 100% self-sufficient, meaning that for their day-to-day management, they are in charge. But when it comes to the Apex, we depend on donor. Currently, even the salaries of the Apex staff is being paid by donor. The building that we are occupying is being paid by donor. So you see the donor dependency. But what we have done from this donor dependency through our strategies is to ensure that how within a year in, year out, how we are going to try to cope and improve on on generating revenue so that the movement can be sustainable. This portfolio at risk was a great challenge. When we started measuring, of course, in terms of capacity building, understanding portfolio at risk, the effect of it, how it will affect the business, the idea was low when you look at the credit union. But with the training that we have organized, the leaders understood. There was a certain time wherein even the leaders are delinquent. And if the leaders are delinquent, it means that if you are going to administer a particular product or service to another person, you have failed to comply, meaning that the organization is at stake. So we create a system as lesson learned. We create a system wherein we are able to track a leader, a staff, to ensure that we try to manage. So based on the lessons learned on high portfolio at risk, these are the strategies that we have put in place. Lessons learned from successes, growth of community-based CUs. Most of our CUs in Sierra Leone, they are community-based because it started when we have the donor promoting credit union, they concentrated in the rural areas. So most of them, we are looking at it just like any other institutions. But when we have the idea, we know we try to inform them, we try to encourage them to increase their membership. So among the success, it was a success having a community-based credit union establish and increase their members. But among this growth, we understand the risk of expansion. there was a credit union that has increased its membership. It is well known, but what happens? The staff that we are in the credit union, the board members that we are in the credit union, fail to understand how they can manage this expansion. So though it was a success for the increase in membership and other areas, but when the credit union expand, there was this risk. So we have also learned a lesson on that. Monitoring, we have been doing monitoring, but what happens with the monitoring? Before, it was like a data collection. We just ask for information like shares, savings, loan, and try to see membership and try to see how we can have reports. This was a success because it was the start, but with the support of our donors, now we have a department known as the monitoring department that are responsible to monitor this credit union both on-site and off-site. Auditing, when the movement started, auditing was being done by the Department of Cooperatives. For bigger CU at that time, we consider some of these smaller credit unions, we are not audited. Yes, in fulfillment of the bylaws, some, it was a success. It was a kind of success from our part. But with the intervention of other partners, now we can tell you that most of our credit unions are being audited by external auditors, just like banks. Are we together? Are we together?
Yes.
I think
Okay,
we had somebody who had their microphone on, but please go ahead.
Okay, thank you very much. So just like what I was talking about, the auditing, it's a success. Now, one of the lessons learned, the auditor, the external auditors are trained. Most of them are qualified in auditing other financial institutions. Credit union being unique and the size of this credit union in terms of total assets, in terms of their membership, it's difficult for the auditors. But as the apex, we try to ensure that they understand by organizing training for them to understand the process. We, through the support of one of our partners, we have the finance director of NaCCUA, the apex body of Gambia. He has been in Sierra Leone particularly to look at this audit for about 2 occasions. So the external auditors that we are dealing with now clearly understood the concept of credit union and how these credit unions are being audited. Yes, they are not 100%, they did not understand it 100%, but they now have a strong base in auditing credit union. With the intervention of the auditors, we also see the manual, moving from the manual to another point. We started with the easy book. Now we talk about the NaCCUA soft. When these auditors started auditing, it was a challenge. They have used to a system. But when you go to this credit union, you have many of these individual ledgers, you have to go through them. You have this issue saying, oh, I was thinking that I should have done this work for only 2 or 3 days, but I have to spend nearly 2 weeks on them. So with that, NaCCUA also see the opportunity to ensure that from these successes, we started with the easy book with 10 credit unions. For 2024, we have about 7 credit unions that have been audited through the easy book, which is a success for us. But we are also looking at the challenges this credit union have faced in terms of capacity, adding more capacity building on the staff, their machinery, and even the environment. Also in the area of maintaining staff to ensure that if you have trained the staff, you provide all support to ensure that you retain the staff. So among the issue of the information system. We have started, especially for CUs, we have started it. We have now moved to the NaCCUA soft, which is a software, and the lessons we are going to learn from it, we need to ensure that most of these credit union will move to a software, not just limited to the Excel system, which is the easy book. So once more, this is the end of the presentation. Thank you all.
Thank you very much indeed. Very right on time. That's great. That's excellent. I would invite people, the participants, to put their questions in the chat. That would be great. We have at least one question which I will put to the speaker. But thank you very much, Alhaji Mohammed Kanu, for that. And I will begin to collect the questions and put them to you as people upload them. Is there, as I said, please feel free to put your questions in the chat. Let me kick off with what the first question that was already put up there. This is from Kurt Wellington, who I think is from Trinidad and Tobago, and is asking what are the challenges that you face or your members face when there is a change in the board of your credit unions? Does that present a problem, or are you able to navigate that change comfortably? So over to you, please, Alhaji.
Thank you very much. Of course, when you have change in leadership for any institution, there must be a challenge. We all can accept that one, because those ones that are going most times have acquired knowledge, they have developed their capacity, they have started understanding the concept. So if you have a change, automatically it will affect the credit union. But what we have done, like say for example, the board, at least if we have 5 board members, when we started, we have this challenge because most of these leaders are selected at the same time. So meaning that if they are completing their 2 terms, all the board members will go. But when we have now developed even from the NaCCUA perspective, if you have 5 board members who are old, during the first term of office, that is the 3 years, you try to ensure that you only have 3. That the first year you have 5, that's they are all elected in the same year. In the second term now, because based on the bylaws, it allows an individual to go for a maximum of 6 years. That is 2 terms. So during that time now, with the intervention with education, we must ensure that at least 2 of those members will not run for a board position. So at least we have a mixture of old and new board member. So in case for after the 6 year, the 2 terms, the 3 old board members have served their term. The 2 new ones have already learned from these old ones, so that they will also incorporate other leaders.
Thank you. Thank you very much. We have a question about the issue of the common bond. You know, credit unions often are supposed to have a common bond tying the members together. So the question is that, is this rule applied? And if it is applied, does it present or has it presented any problems to your ability to mobilize and grow the organization, the credit unions?
The common bond is clearly established even from the Cooperative Act, even from the CU bylaws, but it was a kind of challenge to clearly understand what the common bond. The credit unions will register that the common bond for my credit union is free term, not specific on a particular area.
So you say it's Freetown, is that what you said?
Yes, some credit union will say Freetown as a common bond, meaning that you will have to deal with any member from any part of Freetown. We know from the context of Sierra Leoneans, Freetown is big. So it is a challenge if you are saying Freetown. So now it's clear for most of the credit union. But one of the challenge, we have those credit unions that are big from our own perspective. Like some of them have started to be look like they are operating like a work base. But we have also ensured that we guide on the process, because there was this issue. If I was based in Freetown, my family is in town, that I have to move because of job. As an individual, I have to move to another part of the country. Does that qualify me to still be part of the common bond, which is Freetown? But that one has been cleared. So yes, the challenge was how the credit union member, the leaders, we are able to determine or understand the common bond area. And the key challenge is delinquency, the portfolio at risk. If you cannot properly manage your common bond, or you just have a kind of open bond, for you to trace some people when they have taken a loan, it's also a great challenge.
Okay, thank you. So there's a question around your relationship with donors, that on the one hand, what are the factors that you would identify that allows you to collaborate well with your donors, to work successfully with your donors? And are there any factors that you would identify that are a challenge for your successful collaboration with your donors?
Yes, let me look at it on the perspective, the positive part, which is the kind that will lead us to success. NaCCUA as an institution has its own strategic plan. Projects also has their own work plan, strategic plan, or their way of operation. So most of these partners that we are operating, our strategic plan aligns with some of their activities. So that's the good part. So they are complementing the apex. On the other parts, as a challenge is visibility. Let's take the example of monitoring. As a core mandate from an apex is to render monitoring to this credit union, but because of funding, currently our partners, one of our partners has staff that are doing this one. But one of the things that we have already as a way of succession is to ensure that we have planned a transition point to see how this staff can transform or be transformed to NaCCUA to serve the same function.
Okay, and you talked about the positive aspect, but what about not the negative, but some of the challenges?
One of the challenges that I have mentioned is the visibility of the apex.
Right, okay.
That is a main challenge, because yes, they are supporting us, but if this staff is being labeled or is being recruited by this partner, when he or she goes to the field, the name will be for the project, not NaCCUA. Even you proclaim that, okay, we are doing this, but practically you are not doing it. That is another point. But one way that we are trying to overcome this challenge within the coming years is the transition stage.
When you say transition from what to what?
Because these are function responsibility by the apex, because of funding, the project, we are implementing it. So now we are trying to ensure that this staff will be moved to NaCCUA. The project will only now support NaCCUA to ensure that this activity is being implemented by the apex organization, which is NaCCUA.
Okay. Okay. So there are a couple of related questions that I would like to pose to you. The first one is to do with the common bond issue. That how do you have, and if you do, how large are they? Sort of occupational credit unions. So for example, Do civil servants belong to a credit union of civil servants? Do the police belong to a credit union of police? Do nurses and so on? So does that operate? And then this linked to the question of the donors is just to give us an idea who these donors are. And so who are your main sort of donors and where do they come from?
Okay. Now, on the area of the common bond in relation to the work-based, just as you have mentioned, that's a great challenge. I cannot tell you that we have one work-based credit union. Though our strategy recently we have engaged the civil servants are in the process of forming a credit union.
Okay.
They have made their bylaws. They are in the process of having a familiarization tour because civil servants cut across the whole country. And for them, the issue of common bond will be civil servants. So no matter you are staying far away, the common bond will be civil servants. For the police, we are in engagement with the police, the fire force, Bank of Sierra Leone to ensure that they have credit union. So if, say, for example, Bank of Sierra Leone, they have staff in their operational areas. So no matter if you are not staying in town, you are a staff of Bank of Sierra Leone. So the common bond will cover you. So that's on the area of common bond. So meaning that for community-based credit union, you will be focused on location, specific location. But when it comes to work-based credit union, you cannot base it on only location, but the whole Sierra Leone. Let's talk, say, for example, the prison, Sierra Leone Correctional Services. They have all their staff all across the country. Their common bond will not be limited to just Freetown. We are also engaging the UN, and UN have several branch division, UNICEF, UN, and like. So if they form a credit union, you will know that their membership will be across the country. To be specific on the donor, we are being supported by the Irish League of Credit Union Foundation. They have the foundation in Ireland. They also have Aircoff Limited in Sierra Leone. That is one. We also have the German Sparkassen Stiftung, DSIK. It's a German NGO. They are also supporting us. Then we also have the Continental, just what you are doing by the web now. We also have a COSCA, through CUA and NaCCUA. They are also supporting us. That is why during my presentation, I was talking about the NaCCUA soft. It is because of that collaboration.
Okay.
We are also now coming closer to ensure that we have sent Sierra Leone to also be one of our partners.
Sorry, what was the name again?
Send Sierra Leone.
Sense.
Send Sierra Leone.
Send Sierra Leone. Okay.
Yes.
Okay. All right. And who are Send Sierra Leone?
Send Sierra Leone is an NGO. Their main office is in Kenema, around the eastern region. They are promoting various activities, but on the area of the credit union is empowerment. Through their project activities, one of the key areas for sustainability is to ensure that they introduce credit union to their members, to those areas that they are operating.
Okay. Please feel free to put your questions in the chat. I would like to ask you, Alhaji, if of course you're the apex body, so I take it that your membership comprises the smaller credit unions, in the country. But the question I'm really wanting to ask is that the individual members of your credit unions, is it taken for granted or is it accepted that they may all be borrowing to do business? that is really their business persons of, maybe small business, but it's a business? Or do you require and so that's number one. And number two, do you accept actual businesses? So you do accept a business organization to join a credit union?
First, when you look at credit union, it's being owned by their members, served by their members, and they make informed decision. With the first question of individual in terms of borrowing, on the credit union perspective, the primary credit union perspective, you have various things that you look for borrowing. You can borrow for business. You can borrow for your daily living, that is in terms of buying food. You can borrow for agriculture. You can borrow for education and the rest. So they have a variety of options. It depends which one you are coming for. And most of the thing that we did something that what we revealed was most of them we are coming for liquidity support, that is for business, for education. There was a gap for agriculture because when you look at the normal way of when you give out loans, how you are going to pay, you pay on a monthly basis. But if you are providing a product like agricultural loans, it will based on season. So now, through the engagement of UNDP, we have a policy that will also talk about agricultural loan, which we plan to introduce to the CUs after they clearly understood and have the capacity to implement. So that's for the individual. The other question was
whether you take actual businesses as members.
Well, they also have this part that you can join a credit union individually. You can be sports. You can join as a group. You also join institution. You can join as a group. Let's say, for example, you have a school. You registered. You come to the credit union and register it as a group, meaning that in the group you have people. It can be 10, it can be 20. Like for other credit union that we are also looking at, they have this group like the VSL. This VSL will be registered in a credit union as group. Not their members are not divided like say you are going to say 1, 2, 3 up to the last point, but they are being registered as say given a particular group name. We have another set we call the gradation microfinance. Those low income earners that they thought that they cannot have the initial amount to be members of the credit union. They will pass through this product, that is the gradation microfinance, wherein financial literacy will be key for training, for capacity building. And from there, they will be registered as a group. And for them, loan savings will be treated as a group up to the point of graduation.
Okay. All right. Thank you. I'm still making calls for questions, but in the meantime, here's one. So, two-part question. One is, how successful are you in making sure that your members, especially the individual members who borrow, all pay back? So what is the the level of sort of successful or successfully performing loans, or maybe one would turn it around and say the non-performing loans, hopefully they're very small. But the main part of the question is, what steps do you take? What rules have you put in place to try to make sure that the level of the number of your borrowers who don't pay back is actually very small?
Yes, since this one concerns the primary credit union, all their decisions, we only guide the process. First thing that we did is to have a revised loans and credit control policy. Another part is capacity building to ensure that the leaders and staff clearly understand what is in the loan and credit control policy and for them to implement what is the policy. Another way is to ensure that we encourage the collateral is savings. So another way is what? We encourage the mobilization of savings. The concept of telling them that this is not just about taking loan. You need to invest. Then we have the monitoring team also provide a kind of check in which the staff knew that if they did this one, believe a report will be sent to the board and the board will take an action. Another key area is with the introduction of the external auditors, they are going strictly with the policy. So by any time they are auditing this credit union, in their management report, they also brought out this. So what is happening now is consolidation. This is what we have been doing, but way forward, this is what we are doing. As I told you before, when we started monitoring, we have even the leaders of this credit union are delinquent borrowers. But with the tracking alone, it has reduced that number. So the same thing is happening. Now, loans officers clearly examine, assess the loan form before they pass it to whoever is going to approve. And there is a clear process even for disbursement. So those are the strategies that we have put in place, and it is working for most of the credit unions.
Okay. So any indication of the level of, I don't know how you given all these measures, what percentage of the loans or people who borrow actually don't pay back everything? How small is that number?
It is not small. What I'm saying now is what we have just done.
Okay.
What we have just done. But the percentage is not small because there is also an issue of this recording. You will notice that there was a time wherein debt has been written off. Instead of removing it from the calculation of the portfolio at risk, it is still there. So those issue of record keeping, it was a challenge, but we have tried to ensure that we harmonize and see the way forward. We have credit unions. Before, we have credit union that we are having 80% portfolio at risk. But now, I think the highest is around 50%.
Okay.
But we have also classed them to ensure that those that have put high portfolio at least, we assess and see what has caused this and engage the board members to see that it is being reduced.
Okay. Thank you. We are coming to the end. There is one question perhaps which is linked to this. You talked about delinquent members. So there's a question here that says, how do you deal with delinquent members?
Yes, the policy that I have mentioned for loans is the loans and credit control policy. We have a clear roadmap on how loans are to be followed. We provide direction in the document on how loans are to be followed. Say, for example, you are expecting someone to pay on the 27th, that is tomorrow. You need to contact that person today. You need to kind of send in a reminder. If a person is delinquent within a day, you have not seen this person, you need to send a reminder. After a week, you have to pay a visit. And in general, as staff and board members, you need to be abreast with your members. And sometimes it is not only at the time of payment. If you have experienced that this person has been paying, but because of bad business, automatically that person will not be able to pay. But if before the payment schedule, you visit the business area of this person, you try to assess, you try to understand, you try to build a relationship that will enhance that. If they have a problem, you will be the first person to contact. So this is how we manage delinquency. But one of the key challenges is, like it relates to the common bond. When it is difficult for you to locate a borrower, automatically it will lead to a high increase of delinquency.
Okay. Okay. So I'm going to begin to wrap up now. So we've done just over an hour. If there aren't any more questions, I don't see any more. I think I will begin to do that. So Alhaji, thank you very much for your intervention. Let me remind people again that this recording and other previous webinars, so the recording of this webinar and recordings of previous webinars are available either on YouTube or through our website. So you can consult them and have a listen at your leisure and pleasure. And so Alhaji, I would like to just formally thank you very much. The participants have left messages congratulating you on your clear presentation with a lot of information. So I would like to second that and thank you very much for making this webinar, joining us on this webinar. I would also like to thank the interpreters and all the staff and executive members of CA who helped to make this possible. We anticipate having another webinar next month, so please look out for that, although we shall let you know. We will notify you that the webinar is coming and when it's coming, and invite you to register as best when you are ready to do so. So once more, thank you very much to everybody. Thank you for participating, and hopefully see you next month when we do our next webinar. Thank you. Thank you again, Alhaji. Thank you.
Thank you very much. I really appreciate the platform. We appreciate as NaCCUA. The first webinar was attended by the general manager. Now it's a kind of building the capacity and also trying to market the Apex. So maybe the next webinar, we are going to send another person, but it's a great offer. We appreciate it and always ensure that you have a representative from NaCCUA. Thank you very much. Thank you to the team. I really appreciate the preparation up to this moment. Thank you very much.
Thank you very much. Thank you very much indeed. Okay, all. So that's it. We will see you next time. Thank you.
Yeah.